All right, everyone. I am very excited about the following panel. It is about bridging the gap between advocacy policy and tech. And intentionally, you see here people working in policy advocacy, as well as somebody who I intentionally picked a moderator who is a tech builder, just because I want to signal to the world that it is possible that you build a tech and you can speak the same language that is understandable by people who work in regulations and policy. So please welcome the panelists on the next session. And yeah, Adrian, take it from there.
Perfect. All right. Does everyone have a mic? Excellent. We're good. Yes, we can all introduce ourselves. I'd like to say a little bit to get started here. We can make this spicy. If you're worried about being seen on camera, put on a mask. Maybe too late by now, but it may still help. There's no need to answer all the questions in turn. We're not here sort of going around the circle and everyone gets to say their little 30 seconds. Like, we can argue about things. It's totally fine. I am not a lawyer. I just think that law is interesting and helps me relax. Also, if you're actually an engineer, honestly, you know how law works. It's kind of like JavaScript, but where you don't have an interpreter, but the interpreter instead is like a quad system and the language is completely unspecified. It's kind of wild, actually, if you start looking from an engineering perspective. So I think if we ever solve blockchains, I will do a law degree to just have fun. Yeah. Also, I have a bunch of questions prepared. We don't have to go through all of them. I think if we want to take in any other directions during the panel, that'd be great too. The goal overall is, I think, to help especially the technical people in the audience that are building privacy tools and that are sort of advocating and advancing the state of ZK tech on what should we be thinking about, how do policy makers actually come to conclusions, how does this process move, also how does it move locally versus globally, and yeah, I hope we can drill into some of this. So with this, let's go around and introduce yourself, please.
So hi everyone, this is Amit. I would be the tech guy here, so I'm also looking for a lot of answers. But yeah, so brief background, what I'm building in Labyrinth, it's a modular privacy stack. We're trying to give power to the users and sharing and disclosing secrets with a strong powerhouse privacy-based engine based on ZK. About my background, I have a background ZK scaling, worked for a long time for a layer 2 solution. I am an engineer by background, but unfortunately also have a PhD. I also teach and advise in a university called University of Warwick in an AI blockchain center. Yeah, looking forward. There are a lot of unanswered questions. Yeah.
Cool.
Hi everyone, my name is Fatemeh. I'm a Swiss qualified lawyer. I've been in the space for the past 6-7 years. Before that, I worked on white-collar criminal defense and high-profile litigation. Now I'm doing crypto law with a privacy centrism, and I joined recently Anoma as their GC.
Hi, I'm Andreas. I'm heading the legal fintech and Web3 team at MME. We're a law firm based in Switzerland. We've been involved in that space for more than a decade now. And I help on one hand our clients to navigate through the regulatory jungle, but also I help or try to have a certain impact on policy making and regulations that are being built by governments.
Hi, I'm Alexis Roussel. I'm the CEO of NIM Technologies. So we're building a mixnet. We're in Switzerland also, and we're building a mixnet, which is a privacy infrastructure. If you send data through this mixnet, your data becomes unobservable, and that's a key element for building anonymity. So it's not just about encrypting or hiding what's the message, but it's also hiding that the communication itself is taking place. It's a part that we usually forget about. So that's on the tech side. I'm in crypto for now 10 years, built up a Bitcoin broker 10 years ago, and I really went down the rabbit hole of Swiss regulations. And I'm a legal by training, I'm a legal specialized in a lawyer. I'm not lawyer, but jurist specialized in new technologies, and I have a whole aspect of advocacy in Switzerland, trying to bring the topic of anonymity. So both technically with the MixNet, but also legally in the Swiss context. And so I went through different steps to redefine this. I worked on the right to digital integrity of the human person, and inside this right to digital integrity, there's a right not to be surveilled, measured, or analyzed, or, quote, right to anonymity. And these rights are being adopted in Switzerland. Geneva has voted for the right of digital integrity, Neuchâtel next. And so I'm really pushing this topic on from a humanist, from a fundamental rights point of view, so that anonymity and privacy, and then by ricochet, by privacy can be implemented on the fundamental right level in Switzerland.
My name is Marina. I'm a co-founder and I'm leading the European Crypto Initiative, which is an advocacy group based here in Brussels. We basically established the moment where MiCA was published, so it was almost 4 years ago in September. And during this time, we have worked in negotiating the markets and crypto assets regulation, some also other laws that were related mostly to anti-money laundering, so kind of related to financial privacy as well. Before that, I was working in crowd investing and also negotiating laws around crowd investing, but 7 years ago I joined blockchain, so since then I'm here.
Cool, thank you very much. I think sort of an easy question that I always have, because sort of depending on which regulator you speak to, you get vastly different answers, but in your experience, how educated are the regulators? Because I've spoken like the Bank of England, they have no idea as far as I can tell. The Europeans are way better at that point, DG FISMA, for example. But like, yeah, so in your experience, like maybe the regulators you've interacted with, like how knowledgeable were they? How much interest did they have in the space? And sort of how much did they think not only about, well, for the next 5 months, I'd like to see everyone's transfers, but also like what happens over the next 10 years if this technology actually gets adopted?
Maybe I can start.
Great. Yes, thank you so much. Just jump in.
I'll jump in. So it really depends. Like the blockchain space is now huge. And so there's so many different things that the regulators, at least in Europe, are looking into. We have tokenization, we have privacy, we have MiCA, we have staking, like there's so many different things. I would still say that Switzerland should be #1, most likely. And of course, Andreas will say more. But the way I was able to speak to the Swiss regulators and let's say the National Bank, etc., we just came in the room and talked about ZK. You don't need to explain what ZK is. And that was fascinating to me. I don't think that a year ago, and a year and a half ago, the EU regulators would be on the same level. Maybe there are some people in certain institutions that would be on that level, but like not everyone. So the other part is what they have been working on already. So they have worked on MiCA since 2017 already. And there are people that are super knowledgeable about this topic, like you said, DG FISMA, so that's the department, the digital department of the Commission. There are some people in the parliament that were very knowledgeable, still are, but they are not in the parliament anymore because we just had elections a month ago, or they're not going to be in a coalition anymore, so they're not going to have very important roles within the financial departments of the parliament. So for now, for us, it's the parliament, clean slate. We need to start from the beginning, talk to everyone that would be interested in this topic. So for us, the next months are very intense. The European Commission, the heads of the Commission departments are going to change, and we already know, in a way, more or less what's happening. But the people that were working on those topics, they're staying, so that's very valuable because they know a lot. There are people that are following DeFi for, I would say, more than a year or almost 2 years right now. There are people that are following certain other areas, and that's the reality. The other part in the EU that is pretty important is that...
Okay. We will limit the answers to like 2 minutes tops. Very interesting. But any other takes? How qualified are the Swiss regulators?
Yeah, I think I fully agree with many things you said, but essentially the question is, who do we refer to being a regulator? So I think on one hand, normally when we talk about, the regulator says X, Y, Z, we actually don't mean the regulator making regulations, we mean the supervising authorities making sure that regulations are being enforced. And so when we refer to FINMA, which are Swiss financial market authorities, we refer to them as a regulator, but they don't regulate. They apply existing laws and regulations. And I think it's always important to keep that concept in mind. Of course, over the past decade, they have done an immense learning curve. They know a lot of things. If you talk to them about liquid staking setups, they do understand more or less the technology, how that works, and can apply the laws and regulations currently existing on that or not apply them, depending on the result. So when we look at your question from that perspective, I think, yes, it's nice to have, at least in Switzerland, and it seems to be in Europe as well, supervising authorities or regulators who really know their things and do their homework. If you look into the future, do they think 10 years ahead? They're not the ones building regulations. So that would be the task of the actual regulators, the legislative, the commissions, who need to look in the future and see, hey, what does blockchain mean? What does privacy mean in the future and the technology we have? And I think this is not really happening. So there's kind of a gap in between.
I mean, I fully agree with everything, with the nuance that enforcing regulation or making sure that it is applied entails some form of interpretation of that regulation. So there is still like a remaining power within FINMA or any other pseudo-regulator to interpret, understand, and decide how it's going to enforce it. And if you decide not to enforce it, it's as if there is no regulation, for instance. So there are ways like that communication with the authorities, whether regulator or enforcement bodies, can influence the outcome. And if we go back to regulations or laws being created, there is often this thing called consultation process in Switzerland, but it happens also many other jurisdictions where they state their intention for the new laws or maybe even draft it and then submit that to the public opinion. So trade associations would write a commentary, lobbying groups, individuals, just big projects, anyone who has a say or a stake in it would give their opinions, and this will be studied before they actually enact any form of regulation. So there is a form of informal conversation also happening.
Yeah. So I was really confused what to mention because fortunately the University of Warwick, which I'm a fellow, is a consultation partner of Digital Pound. And a lot of Chatham House rule applies. So let me see. So the report is in public now, which the university published with the Bank of England. So clearly, the digital pound actually had a very bad rep from the Member of Parliament due to one clause of privacy. And they were really, really worried. So regulators are just an entity. They might be bureaucratic, but they are liable to respond to the users or the democracy of the system. And it has been voted down right now. It has been rewritten due to the privacy concern. And that brings us to the limelight from the technical or the application point of view. And the education gap, right? So they know there is something which they can do on the privacy front, like zero knowledge or cryptography, right? They have learned of doing this thing from their regular, credit card or your touch payment system. They are approaching it not at a warp speed like an HCC, but a really slow speed, but they acknowledge it. And there are privacy solutions which all of us are building, some of us are building in this room, right? They have a direct impact over what they can implement, and they can pass their own digital pound in a way which is private and which requires a sufficient amount of privacy, but it also balances the demands of regulation, keeping in context the power remains to the user itself, right, not to the central bank.
So I will just want to be a bit
be spicy.
contrarian and be spicy and be very pessimistic, actually, because I saw. So I'll give a small story about how it happened in Switzerland. Switzerland, FINMA had two periods. There was the first period with Mark Branson, basically, who was the lead, and he was like pro-tech, and he opened up a fintech desk, and there was like young guys there who started to understand the thing. And there's a second period where he had to leave, and management went into a bad shape, and FINMA start to turn over and be much more difficult to work with. And what happened also is that when it comes to privacy, when they're really nice people, you can always talk to them and push up projects and get some rulings and everything. That's totally fine. But when it comes down to privacy, at the end, they will go against it. So, and this, we saw it in practice. So there's two things that we saw. Is one, that they are they are developing their practice to go down to removing any threshold of non-KYC things in Switzerland is being removed by FINMA in practice, not by law, but by implementing things on the side. And when we went through the consultation process, which is an open consultation process, they were trying to get rid of some part of the of non-KYC transaction. At the end, they had to admit in writing in the final text that they were against privacy, anonymous means of payments, and they were discriminating against those, even though this is not a concept which exists in law. So there is this like I don't think it's by thinking of it. It's more like an organic reaction of this institution, and people, when they're pushed into it, actually they're against privacy.
Interesting. I will follow up on this in a second around also the Financial Action Task Force, and we can speak a little bit about sort of like, does this come from the global perspective or the local perspective, and like how much is being enforced here. But actually, I just learned something very interesting that I didn't realize, that true, FINMA is not a regulator in that sense, and I think we've been very Americanized, where I think we all view the SEC kind of as a regulator as well as the enforcer. Is this also true in other countries? Is this generally the split, that it's always like you have some regulator that actually makes the rules, and then you have someone like FINMA trying to enforce them, or is this unique to Switzerland?
No, it's like the typical setup. I would say that legislation is not drafted by government agencies, it's drafted by the legislative body. And so, of course, I agree, you have interpretation liberty, and you have an importance in kind of setting the path how to apply the existing framework, which is then going to be controlled by court. But in a democratic systems, normally the ones making the rules are not the ones applying the rules.
But I would say that currently we're in a position where this is the setup, but what the regulators in Switzerland I witnessed, and we saw it also in the US, they actually, through practice, change the interpretation of the law in the point where the law is applied in a completely different way, so it's becoming non-democratic, and the whole industry is too afraid to go in front of the courts, so they don't have the balance system, and the politics doesn't understand anything and doesn't go into being the balance also.
Yeah, I dare to say that's not a structural problem, but an industry problem.
So we should sue people more. We should sue the government more. That's what I'm hearing. In fact,
Yeah, of course. But that's what people in the US
right. Essentially, that's also, I mean, our role as legal advisors is not to just listen to the regulator, supervising authorities and say, okay, yeah, they say that, so we're going to tell that at our clients. I mean, it's like we don't generate any value like that. We need to challenge those opinions and like really try to push it, and if we believe, hey, they're wrong, we need to try to correct it in courts. And if the courts will follow our opinion or the supervising authorities' opinion, that's another question. But I think we can't just rely on whatever guidance supervising authorities gives. And also maybe a last thought on that. If you look now, the Danish authorities, they published these guidelines on what are the criteria for a DeFi project to be sufficiently decentralized not to fall under the MiCA regime. So we may touch upon that as well a bit later, but I'm just trying to say these are guidelines. This is a thought of a regulator, how they want to apply the law, which doesn't mean it's correct. It doesn't even mean that they're sure of what they're saying, that it is the way they should apply the law, but they need to start something and somewhere on their thinking progress. And it's our role as an industry to challenge that.
I mean, we have something similar, I think, in sort of the tech development sphere, where we're all very much too friendly to each other. As a result, and it's a very good thing, right? Like, we all want to be collaborative, but as a result, very few people go bug hunting in other people's protocols. And as a result, like, we end up with these, like, 3 out of 5 bridges everywhere, because, like, no one really tests the underlying security assumptions. It seems that we should be also being more PvP on the law side.
Yeah, and
I mean,
if I
that's
may
in
just
theory.
apologies, go ahead, I
Sorry,
talk too much.
yes. No, but that's in theory. Like, in theory, it's great to go and sue and like try to push one form of interpretation. But what we see with the SEC is this thing called regulation through enforcement. So they would like go after a project and push their own opinion and interpretation of the law, and they would kind of, the facts and the practicalities of the case would make it so that the project would want to settle rather than fight this in court, because it costs a lot of money, takes a lot of years, and creates this whole space of uncertainty where the project cannot like build further. So they would rather find an agreement and kind of cave in the interpretation of the regulator to just end the case, and that's another way for them to push their agenda, and then they can prove that, hey, like my interpretation won because they had to sign this agreement with us or whatever. So in theory it's great, but in practice there are a lot of other forces in motion.
Just to add, you know, the conceptually, like how, like I think and the tech team also think about the regulation. So there's a concept of competition within the government agencies are a power structure, right? And the power structure gives the currency. And what we have seen in crypto world is another digital currencies. And if you look at from the regulatory point of view, what I see when we talk to the ecosystem, there is a competition within the alternate currency. What if that alternate currency brings up a better way to enhance the regulation, right? So they are also thinking, you know, that there are the structure within the competition. What if Ether has a capability to become regulatory compliant for the people, not the regulators, right? For the people. Can we design such technology? So that is speeding up their process as well, right? That can lead to the adoption and changes within the regulatory mindset. Like that means there is a competition. That means the technology adoption should increase from maybe a digital pound and takes you know, ZK as a zero knowledge pool system, shielding as one of the criteria.
Interesting, cool.
May I add something?
Yeah, of course.
So just to bring a little bit more structure from the EU side, the regulator, we have 3, they are working together, like Commission, the Parliament and the Council. So you most likely have seen a lot of tweets when Parliament does something, but it doesn't work like in other member states where the Parliament is the one deciding. All 3 institutions decide together. Mostly we're tweeting around the Parliament because they are also tweeting and it's public, but all 3 institutions again are important. And then as you said before, there are authorities that are enforcing those, and we have ESMA and EBA on the EU level, but we have also member states authorities. And so for example, for the markets in crypto assets regulation, you will have 30 different authorities that will interpret MiCA in different ways, and in each of them will have a paper like the Danish paper or just like internal paper on what decentralization is. And this is where the complexity comes in. I hope they will be aligned with some of the guidance that have legal power. So the one from ESMA do have legal power and they are binding, so they need to follow them. There are some that are, for example, technical standards that they follow, some are just guidance. But as you said before, the one from the Danish paper is just, I say the whole week is basically a gift for us to discuss during this conference, but it's really just a paper.
Yeah. And to add some complexity on that, thank you, Marina, it's when you look at these guidelines and the binding law, I mean, there are always a lot of questions up for interpretation. We never really know how to apply things in detail. And there also, each regulator will, or a supervising authority will have one practice when they give guidance. So in Switzerland, we can ask for these non-action letters. Other authorities do it slightly differently. So when you discuss with them, ask for permission, you're going to get one set of answers. But if they have to enforce the law, you get a different set of answers. So we as advisors, tend to look at only the enforcement side because that tends to be much more liberal and less conservative than when you ask for permission.
interesting. The enforcement side is more liberal.
Well, they have to, because in an enforcement, you can't just say, well, yeah, from an economic perspective, we believe that setup looks like kind of similar to a banking activity, so we would regulate you as a bank, as an example. In the enforcement matter, you really need to deep dive into the law and the setup and apply it, and you need to uphold in front of a court in the worst case. So there's the real discussion taking place.
Maybe shifting gears a little bit, because we spoke a lot about sort of 30 different regulators or enforcement bodies in the EU. We have Switzerland, we have the US, we have the UK. How much, sort of like, I'm trying to get a sense, right? Because this is a very international industry, but we have many different systems that interact. Like how much, what's the gradient here going from sort of very localized policy, how much does localized policy affect global policy or vice versa? And sort of like, where should projects orient themselves? I mean, like it's very easy to go like, well, I find my favorite enforcement agency in Europe, I pick one of the 30, I assume I get access to the single European market, right? Like in Switzerland, a lot of projects end up in Switzerland because the FINMA is quite nice. At least they're clear on most things. So like, how should projects think about this? Sort of, how much does it matter that you're locally compliant? How much does local compliance like spill over into the global world? And how much does globally it come back to also like sort of inform local policy?
I'll just give an example of how we did it at NIM.
Oh yeah, actually also Geneva. I mean, this is even crazier that like now individual cantons in Switzerland doing their own things, which is very cool.
So how we did in NIM, because NIM we're a global project from Switzerland, and so we issued a token and we are building privacy tech, and so we had to do a number of things, no action FINMA letter, for example, and we thought about this. So basically here it's thinking about your threat model, right? Okay, who are you going to possibly anger if you do things? And obviously the first case you have to be compliant. You look to be compliant in your own country. So being in Switzerland, you have to be in the frame of the Swiss system. And then from a Swiss project, then we said, okay, who are going to be our user? We'll have people naturally in Europe, in the US, in Asia. And then we thought about, okay, who are the regulators who are really able to touch us somehow, right? And we decided that the European ones around us is a concern, right? We have to somehow mitigate this, but the US is a bigger concern. So we adopted a policy where we are Swiss compliant. We excluded ourselves from the US system following their interpretation of exclusion, which is Reg S. It's a very specific way of doing it. And so we could indeed comply to the US thing, and then being being relatively okay with the European ones waiting for the MiCA. And then the rest of the world, well, I mean, we never saw any enforcement coming from China, for example, or whatever, so we didn't care much about these regions.
So I would say that there are maybe three important elements that would be good looking into. One is, where is your market? So where do you think your users will come from? Definitely look into that. And as you said, also incorporation, of course, but I think market is like super important. MiCA is not a rule that gives rules for everyone that is incorporated in Europe, but it gives rules to access to the European Union users and citizens. So whoever wants to have a user, I don't know, in one of the European countries, you need to comply with MiCA if you had your service provider, for example. The other one is what's basically happening around the world. So even if you're, I don't know, let's take an example of Circle. It's not related to privacy, but it's a good example because the MiCA rules for Circle already apply. So for stablecoins, they do apply. For them, the most important market is 100% USA, but there's nothing happening there. So they had to engage in Europe because Europe started first, and Europe is also setting some of the standards that USA will follow lately because they had so much work to do on standardization, internally changing, creating a new product, that for sure some kind of a global standards will be following whatever happens in Europe. And the third one is basically your capacity. Policy has become professionalized. Teams have one or even more people in their team to do this policy work. It requires a lot of work. It requires a lot of relationships. Whenever something happens, when the house is burning, you reach out. it's not really helping a lot because you need to build relationships over years. And then when something happens, they know you're ready. They will call you themselves, or you basically reach out, and it's much easier that you will have a good relationship with them.
Yeah. I think I normally take a very structured approach. So we developed this policy framework toolkit for developers. Essentially, when you boil it down, policy around the globe, everybody looks at the same topics. The individual regulations, they may change, banking regulations or whatever, email regulations, but they tend to have the same policy considerations behind them. And essentially, these are anti-money laundering and embargo, sanction, terrorism financing, fighting concerns. These are consumer protection concerns, and these are concerns related to the stability of financial markets as such. And then you have some tax topics as well, so like 4 key concerns. And I think what you can do as a project, that you look at this map of policy considerations and place yourself on that map and look, hey, our project, where do we have touching points on these considerations? And if you detect them, kind of score them and put yourself on a risk matrix, and thereby kind of get a feeling, hey, what kind of regulations am I likely to touch on a global level, and then look at this market perspective. Where do I want to go? Which markets are easier to access? Who do I need to talk to get legal advice in particular markets? What others don't place that much focus on AML regulations, for example. So I think this structured approach should really help.
So for me, one thing which I think which is missing in this the zoo of regulation, right? Local versus global also leads to, there are a lot of local entities, right? And so there exists a big gap in a kind of a central coordination agency kind of a thing. And if we look at, I think we go back to the last financial crisis, right? And there was so I know one regulation by, literally worked on at Dodd-Frank, right? The financial crisis had came at Dodd-Frank, and there were many regulations which kind of replicated that along the country states, right? And there was a reason for that, right? People believed that, especially from the US side, that this should be enforced quickly, and this should also be enforced and subsidized and whatever, right? Money printing or subsidies. So the same thing, the global coordination, I think, is needed there. And the global coordination is completely missing. And if you look at the counterparts of technology, let's say AI and AI safety, we had a G7 summit in which all the global leaders discussed as like a coordination agencies for that regulation of AI. I think they should do with digital assets as well.
I'm curious. I think this is a great point to also talk about the Financial Action Task Force and sort of how much global policies that are made in very obscure ways to me enforce sort of our local desires to or our local systems that our regulators will just enforce, not because they think it's a good idea, but because it comes from this global consensus on something that you should be doing.
That's an interesting bridge between the previous conversation, because we're all here talking about risk mitigation and how to basically address the regulations, but nothing is certain. So you asked us, as you said, what could be eventually applied and how you would interact with it. But the fact is that if we think of blockchain technology or crypto project as this decentralized technology, and this is taking the extreme of it. If it's really decentralized and used globally across the world, then this is kind of a language that is very different from the legal language that we know nowadays, that is very jurisdiction-based, very geographically based, led by nation states usually, or international bodies that are formed by nation states. And these two languages, they don't bridge really. So they're trying to communicate, but they do not understand each other, and that creates kind of this in-between space where projects need to kind of navigate and explain to the regulators and interact with them and try to comply, but it's complying with something that doesn't really fit well. And then comes into effect this idea of a global regulation, and the FATF is a body that would put forward like global policies that everyone would have to follow, which is, at least in my opinion, quite controversial, because who gives legitimacy to the FATF? And then you ask yourself, who will decide what this global regulation is? And is it, for instance, the USA that comes with its monetary policies, its own views on sanctions and AML and compliance, and kind of pushes everyone else to comply with it? Or is it a race where the EU will come first with a regulation and everyone else will have to adapt to it? And where in all of these games, like the decentralized technology has a say?
I mean, I'm lying very much on sovereignist approaches where we shouldn't have global things. This seems terrifying to me. But I'm curious, like, you two seem very much like you.
No, I mean, for me, it's a very nice thought to have like a harmonized regulatory body, like making sure everything is running correctly. But let's be honest, the risk that this one agency gets it wrong is tremendously high. If you create such a big body, they have their own dynamics, and we see that with FATF, we see that with other bodies. It's not meant to do harm, but I prefer the distributed approach and say, okay, let's get 20 jurisdictions, give it a try, and maybe one of them gets it right. Great. If we only have one try and we get it wrong, then we're in a mess.
Yeah. So, yeah, I agree, but I think there has to be some coordination, right, of information at least, not like an outcome. Like otherwise, we are into the world of inception, right? You send the beacon to 3 planets and 1 planet lives, right? We like there are other people in other local jurisdiction, right? And blockchain technology, we live in a decentralized world, right? We generally don't want to only cater to the one successful entity in terms of it might be Europe or US, right? But there are other people. We see the community in the blockchain is coming from very surprising places. Adoption is coming from very surprising places. So I think coordination is required, and it's missing.
Yeah, also, I'm totally against a central coordination body, because there is already one and it's making so much mistake, FATF. And I think I think also it comes to the fact that all this system has been built on actually policies which have not proven themselves, right? So the whole quest of anti-money laundering policies right now, we start to see some studies coming out with the results of like how efficient it is. And the 2 numbers I have from different studies is one is the efficiency of how to the funds So the funds which are, the proportion of funds from which are supposed to be criminal who are actually caught through AML is about 0.1% or less. Right. So, and then for each dollar or franc, because I think it was for each franc to capture through this process, it costs 200 francs in terms of procedures, effort, whatever, to get that franc. So it's the most inefficient policy. Even the drug war is not as efficient as this. So because we have now these institutions which are running super inefficient policies, of course. And we don't see it yet because, and we'll come down later on why they're pushing this. They don't have any data. You can still try to make those institutions more efficient, but that will not work because the underlying reason and the underlying effectiveness of the AML policies is just not there. So you see it. I think you see it from a founder's perspective, and I understand this. Well, you say, oh, I want to build this world project, and then I have to talk to all these regulators. Too complicated. Let's have something simple for me as a founder, which is totally fair. That's why the industry is pushing also, I mean, not our industry, but the financial industry in general is pushing for this, right? Because they want to simplify. It costs them a lot. And there's a report just came out recently from a set of banks who are trying to say, oh, let's try to improve how reporting is happening, and because they acknowledge it's not efficient and it costs them that much. So yeah, I think right now it's good to have diversity because at least it shows the inconsistencies, and we need to show that all this system is actually not efficient, and we need to find the real things. And I think verifiability of like the fact that the security that cryptography is bringing is actually providing much more security to the users than the anti-money laundering systems that we have now.
I have a question actually, especially for you two, because you are so vocally against this global like one body regulation. But if we abstract what are norms and regulation, and we abstract it from the nation states kind of like normal way that we encounter it, and we think of decentralized projects setting their own norms, right, through the architecture of the protocols and all of the rules and norms that they navigate within the products. How can this be potentially this kind of global standard for the project, and has this any value as a form of standardization? Because like if a project usually, like we see that very often, like they would adopt a way of doing and then the other project will mimic that, so it creates this industry standard. And I see some risks in it too, because then like it becomes a standard in an acceptable way and the regulator will deal with this one way, or do we need to push for maybe like different ways of doing and like against this standardization?
I can give it a try, but I'm very happy to hear your thoughts on that. I think at the end of the day, it boils down to the question how relevant will self-regulation be and self-monitoring of the industry. And I think developing industry standards is very important. It's going to be very important to also demonstrate to the regulator, hey, we have given it some thought, we want to be compliant, but we believe the system that you want to place us in is the wrong system, so we do it in a different way. And now kind of let's discuss whether our way is a right one as well. And of course, these discussions are facilitated when you have a kind of a similar approach to how to deal with that. But of course, there in the discussion, I think what you need to be careful of that you come up with a standard which is kind of over-compliant, and you set the standard at a level which is kind of making your negotiation point weaker overall. So it's a balancing question.
Actually, I think this is especially what's happening in the US. I feel like personally that I think a lot of projects are shoehorning themselves into some way stronger regulatory stance than I think any reasonable regulator is going to take, especially on the Ethereum side. I mean, it's like, this would have been like ISPs are going to start blocking all network traffic because it may have come from like some router that was like running the Signal protocol, right? Like, so yeah, what's the like, why do projects, I think, like why are some projects shoehorning themselves sort of in this very specific, why they're effectively turning over to the regulator and going like, you should regulate me way harder than I think it's reasonable.
I think it's pretty obvious. Is because there's like large investment when you raise tens of millions of dollars and you build up a team, and then you face the risk of being shut down because you don't comply. All your investors will be behind you saying, "Well, no, here, use my lawyer to be compliant." I mean, that's I would say that's it's a natural thing, but. I really like your answer. There's one aspect of it, and there's the other way. For example, I hope to see one of the industry standards building up for regulation, and I think this is touching this group here specifically. Is that going into a way of doing business with no logs and no data from the user is actually something which I believe is going to be an industry standard pushed by us, and it will be because it will be cheaper to do it, right? Because you're less in a risk. You have no risk of hacks. I mean, not hacks of the data, reputational risk. It's much you create much lighter systems if you don't have data of the people. But here on the other side, the whole industry, the whole financial regulation system is based on data acquisition. You're forced to get all this data.
Forced to create honeypots.
So and to create a huge honeypot. So here I think this is like one of the core fights that will happen in the regulatory space when we can prove that we don't need data and we still provide the security, and they will come and say, no, we forced you to, and they say, well, at one point all these people who are forced will be hacked somehow.
Yeah.
Yeah,
and the good news.
go ahead. Just to answer, because I think this US versus the geography. So if you think it like from an economics of regulation, we are all kind of rational agents here. So there is a cost of complying to the regulation and then penalty which might be implied, right? So generally, if the cost of complying is lower than the expected penalty, you generally put that cost in, right? In US, in US, I believe, like in certain jurisdictions, is like the situation is so undeterministic, right? It's so probabilistic. You are not able to guess the cost of penalty. They think it's infinite. So when you don't know what the penalties are gonna be, you try to put as much cost as it is. And what does mean like putting as much cost? Like that means stopping, right? So that's what's happening. And that's where I think the technology comes in, right? We are right now at the moment where we can reduce the cost of complying significantly down. And that's what the technology of zero knowledge comes in. Of course, like blockchain is getting into like on the balancing privacy with the regulatory compliance through the zero knowledge route, through cryptographic route, and I think that's the right route, because there is always gonna be the state of the world, like global coordination failing, local agencies. We have seen the Binance case, right, and other like exceptionally high penalties. So the only reason stable equilibrium you see is reducing the cost of compliance, and we have seen this in 200 years of enforcing tax avoidance laws. There is a probabilistic catching of a culprit, and the cost of complying goes down with this modernization of tax softwares. Even the lawyer fees are going down significantly now for tax-related reasons.
It would have been my point as well. I mean, the good news is that the cost to collect and maintain data of users are rising year by year with the data protection regimes in place. So me as a financial institution, let's say, my business case is not collecting data. My business case is with financial services. So I don't resell them normally. So it's really just a cost position. So I need to lower the cost and become more efficient, and that technology, ZK Proof and other privacy technologies should enable me to do that. So there should be a pressure also from the CFI industry to kind of go through that. And I think on the compliance level, it needs to come from that industry, because they're the supervised industry at first, which the lobby, so they need to push that.
Like, when talking to regulators as well as enforcement agencies, because, I mean, I've read a little bit about AML and KYC, right? And it seems that the costs are actually it does very little to actually like help with the problem that's trying to tackle, but it increases, puts a massive burden on sort of the individuals that get debanked. Like, do regulators think about sort of the like second order effect? Or is it more like, oh, I see a nail, let's hit it with a hammer, no matter what happens underneath?
It's even worse than this, is that there is a real problem in today's industry, not crypto, but financial. Because of digitalization in general, the ability of scams are huge, right? So there's a lot of fraud where the financial industry or the financial institution is used as a fraud vehicle. Right? So it's not, AML is about, I did a crime, I gain money on it, I'm a drug dealer, right? And then I go to a financial institution and I give my money and I want to clean it, right? That's AML. But actually most of the problems financial institutions find are me trying to abuse the financial intermediary to scam someone, right? And so so the problem is that AML laws have been used because they are forced upon the financial industry, but actually their main use is to try to reduce fraud against the financial industry themselves. And so there is like, it actually creates a system where the tool that you're trying to implement is even not, you're not using it for the right thing. So so the efficiency is even worse than that.
You're not even taking a hammer, you're just like taking your hand and trying to pound a nail into the table. Okay.
And just to add just 2 lines, and exactly like, coming back to my point, like if you see the statistics of percentage dollars fraud happening in credit card industry and take it from like when it was invented in 1980s, you know, that travel card, and now we have chips and encrypted, encrypted messaging between each other, public PKI infrastructure. So even that figure, like, you know, that 20% fraud rate, it has reduced to significantly lower right now. So I think the only impact on this fraud figure was due to the technology, especially the cryptography and the digital technology, rather than the regulation. So it's just adding your point.
No, it's adding.
Curious.
But, yeah.
Maybe to start wrapping up the panel a little bit, and sort of to give the audience a little bit of how they can help sort of shape global policy, global regulations is, in your experience, who are the best advocacy groups? Who should we be talking to? Who's doing good work that needs our help, that needs like some more insight into how this technology works, that needs monetary support? Like, who should we be talking to?
FATF needs a lot of help.
Who?
FATF.
Who also wants our help?
I would say any group that fights and want to delegitimize FATF too.
Ideally, specific things that people can like get in touch with.
Just two things. One is EUCI and Marina here, and I think that they do a great work. And Europe right now is like a very fertile ground for this topic. Second is each of us is actually an advocate. So if you believe fundamentally that we have this inherent right to privacy, it's already an amazing start.
We created actually a first body industry association called UPA, Universal Privacy Alliance. Please check it out. There are a few organizations which are part of it. We still need to make the organization more active, but the organization is there, and we're already like 10 members, and so the objective of the UPA is actually to do this, also to help in the case of, because this is something we didn't touch upon, where some developers right now, I mean, of course, doing the most edgy type of activity, are actually being jailed right now. So if you talk to in certain rings, people are afraid of that because of their activity in the crypto space. They are threatened, and because they bring privacy. So the UPA is also purpose is also to help on such cases for in the future, not those ones, but maybe the future Tornado Cash or other type of cases. We would be there.
Cool.
Of course, I'm biased, but I would say that there are different associations in different jurisdictions, so you need to have someone that is based in that jurisdiction and that does the work there. And there have been historically a difference between associations that were working on privacy when it comes to communication, and let's say the Digital Marketing Act or Digital Services Act, and when it comes to cryptography, when we do communicate, and there were associations that were working on privacy when it comes to financial privacy in crypto. So before crypto, we didn't really have financial privacy associations, I would say, that active as they are right now. But something that works on a local level and definitely works globally on FATF, because those international organizations are somehow reflecting the international power different big states have. So the big states have a lot to say within those organizations, sorry.
Just want to add, one example, a recent example of EU chat law, and overemphasize the role of advocacy, and especially the ground level advocacy, that how important it is to locally associate with your advocacy people and also push the agenda towards the top and make great changes. And EU chat law, like which got repealed, which not repealed, it was never passed, right? Which got rejected, I would say, from the parliamentarians, was only due to the advocacy, I would say, right? If it has not been there.
Huge push, yeah.
Yeah.
Cool. All right, last question, super quickly, maybe 30 seconds each. What's your best prediction of how over the next 5 years this space will evolve, specifically with bridging privacy tech and sort of existing financial systems? Be as like realistic as you'd like to be.
I give it a try. My perspective is that the technology will first be adopted in a on a voluntary level, so where we don't have supervised actors, particularly in like asset management related to kind of DeFi pools and other applications where we're not in the supervised area. There we need to prove efficiency, and then hopefully we can advocate that the regulations want to be changed to take over that efficiency. That would be my hope. But I think we're not going to have changed regulations in 5 years, but we would have a good use case.
So the AML laws in Europe were negotiated in the last 4 years. They will become applicable in the next few years within this 5-year period, which means Monero delisted, which means all the privacy tools or whatever they call them, anonymizing techniques, also prohibited. So we still have a lot of work to do to understand through the Anti-Money Laundering Authority, that is a completely new organization now established in European Union, what these anonymizing techniques mean, because they need to write guidance and standards on that. So those two will happen for sure.
Yeah, I'm very pessimistic. I mean, I think we have to go down the bad way before finding the right way. Why? Because all these things are being built. I mean, on the regular space, they want to destroy all these tools that we're building, that we know are good for the protection of the individuals. Or the people need cryptography to be able to remain in control. And fundamentally, the financial regulations are based on data capture, while we are based on not capturing the data. So there's a fundamental difference that will be resolved when the financial regulation side will adapt really fundamentally. So it's a political. It has to be a political problem and a discussion. And until now, it's not, because on the political side, as soon as it's money laundering, it's too complicated to understand, and it's any way to get the baddies, so please do whatever you want to get the baddies. So yeah, we need to put it back on the political side also.
For me, so next 5 years is too long, but what we can see from what I can see is that we would have the concept of this private choices, right? And I think some of you mentioned in there. That means private choices, private capital, independent of the thinking from the non-formed regulation, right? Because it's still not formed. So they will decide that what I'm doing is right. And of course, with the consultation of advocacy group and the lawyers, right? And they will take it ahead, because first of all, it reduces the cost. It's in their benefit. The using of digital assets, pool or DeFi, or as a payment, or like any use case. So they will go ahead, and they are going ahead. If you look at like a partially regulated sector, right, narrow banking and other things, and they are putting in a bit of an effort there. So I would say like it's very optimistic, and that will create much more wider pressure on the regulatory efforts to enhance this new technology, enhance the success of this the hybrid of intersection of regulatory compliance through technology.
Very briefly, I'm quite hopeful, actually. Although I know the road is going to be, it is already very hard, and it's going to become even harder. But I think that there is no way around privacy tech becoming the norm or being more widely adopted, because we have this, like the same way we will never compromise on being able to close our doors at home and pull the curtains and have this privacy, or pay cash for some of the things that we may buy. I also think that as surveillance technology gets bigger and better, we'll have more need for privacy, and we will not want to compromise on that. But how this will play out with the regulators, I think it's going to be, there is going to be friction. There's a lot of dependencies and industries built on surveillance and on KYC and so on that will lose their relevance, and we'll have to do something else. So there's a big reshuffling to do, but I am hopeful for privacy tech.
Cool, thank you. Thank you also so much for actually turning this to positive, because actually I'm also feeling pretty positive. I think sort of from the actual dev experience, we out-innovate faster than any regulator can understand how this tech works, which is like there's some amount of escape velocity where if there's a new financial asset every 5 seconds, like the regulation has to fundamentally adopt, because like the old regime just won't work anymore. Like we can pretend for another couple of years that it may still work, but I think fundamentally we can out-innovate everyone faster than they can sort of pass laws effectively to like keep updated, right? And so, yeah, I'm also optimistic, I have to say. Thank you so much. We had time. I hope this was enjoyable. Yeah, thank you.
Thank you.
Thank you.